Welcome to your Bitcoin mining Monday, where we're going to jump into some metrics and look at what's going on in the Bitcoin mining space, see where the opportunity is, because it has been a tough market, folks. Bitcoin is down nearly 24% on the year and over 45% from the October all-time high last year. So things move quickly in this space. My intention here is to get you some signal from what I'm seeing and where the opportunity is at. So let's jump straight into it. Looking at overall network hash rate, we can see that hash rate has struggled to keep up, particularly as most miners are frankly underwater right now. So like Rockefeller said, typically if you're buying, it's great to buy when there's blood in the streets, even if it's your blood. That's the good mentality to have in the mining space, is because it is a brutal business. And one person's loss where they're capitulating and they're liquidating hardware may be another person's gain if you're still bullish Bitcoin long term. And so on the 7-day, we can see how hash rate hit 853 exahash in early February, and currently it sits at about a zettahash, which is a interesting milestone. Looking at the 30-day, we're going to take some of that noise out, and again we can see where basically the network hash power peaked at just over 1.1 zettahash and then cooled off, and here we are. And like I said in the previous video, it's kind of decision time in terms of whether hash power keeps coming offline, because miners can only take so much punishment and operate at a loss for so long before you just start unplugging. And here we are at exactly a zettahash on the 30-day, which is interesting to see that line in the sand being drawn. The last difficulty adjustment, of course, dropped a massive 7.76%. And that was this right here, where difficulty dropped hard. And we had that non-adjustment where basically it was a zero adjustment here. And so we do see some more volatility. Lower difficulty means more Bitcoin for miners. And so if you're able to stay online and efficiently stacking those rewards, then you should do well for yourself when things turn more bullish. But clearly we're in the middle of a bear right now. So we saw that previously, how price just absolutely disconnected from difficulty. But difficulty has been a slow, steady creep up into the right, but we're starting to see that cool down and plateau. So week over week, hash price in dollar terms has dropped, similar to Bitcoin, about 3%, because we didn't have a difficulty adjustment. And so the amount of Bitcoin that miners are receiving is about the same. Now looking at miners, the wholesale price on miners is interesting. The most efficient miners, which really most people should only be focused on top next generation efficiency for their mining equipment, because unless you have access to your own power generation, you're probably not going to be buying these older rigs, particularly right now. Look at this cliff where basically the most efficient equipment, wholesale, under 19 joules or watts per terahash. So that's the amount of power that the machine is converting into hashes as measured in terahashes, and the amount of watts as the inputs that it takes to produce the output of hash power, which is what miners are deploying in order to earn the block reward, the subsidy, plus the fees that people pay to use the network, which are quite low. It's currently down from last week, and currently fees are only about 1 million sats per block. In any case, the most efficient hardware has dropped pretty heavily. That's insane how much the most efficient equipment has dropped on the wholesale market. And again, you can taste that blood like a shark. You can smell that blood, and noticing a huge drop like that in wholesale miner prices, that is pain and capitulation in the wider market. So notice how the most efficient Bitcoin miners have started to drop heavily in price just within the last couple months. So real briefly, currently the 3.125 BTC that is included in every block about every 10 minutes is worth about $211,000. And if you're running 1,000 terahash, that's like 5 S21s at 200 terahash a pop, then you would be getting 46,000 Satoshis, which is worth about $32 top line revenue per day. And that does not factor for your costs. So if you're an efficient operator and you've got cheap power, then you can run machines like the S21 and make money. But if you don't have access to the cheapest power, then you probably should be running the more efficient equipment. About $30 million per day, and that's what miners are competing for. That's about $1 billion a month and $11 billion per year. And again, that's not including fees. That's just the block subsidy. So we're about 72% through the current difficulty epoch, which means that there's about 28% to go. The next difficulty is expected to happen on the 3rd of April. And currently, because blocks are coming in fast at 9.5 minutes, that means we're expecting a 5% difficulty increase. That means miners, no matter what hardware you're running and no matter what your costs are, that means all miners should expect 5% less BTC for their hash power. So obviously that's going to affect mining economics. Less efficient operators will continue to unplug, and more efficient miners will stay online. And it really comes down to operational excellence, getting the most out of your equipment, but also running equipment that is efficient. And if you can operate efficiently in this environment, then miners should stand to do very well as the tides turn and economics get better for Bitcoin miners. So I'll see you on the next Mining Monday, and I'll look forward to seeing you in the proof of workshop on School, where we're offering a free lifetime membership. So join real Bitcoin miners building real Bitcoin mining businesses over there at School, skool.com/POW, and I'll see you on the next one. Peace, love, and Bitcoin.